which is good. All right, so we're here. So guys, amazing morning. Let's get started. It's Monday, and we're going to make sure that we are able to go out there and get it, do what needs to get done. All right. Now we're going to start off by understanding these charts, understanding these markets. Like I said, for the people that are part of the United Funded Challenge that we're doing, okay. This week we're going to start getting underway, holding each other accountable for every trade that's taken, okay. Let's do this for a sec. So music-wise, I should be back. It should be background, all right? Music should be background. If it's too loud, do let me know. It's a bit hard for me to tell in here, but it should definitely be background. Just giving us a little bit of a vibe, all right? Now, we're going to start by understanding, just making sure we wake everybody up, making sure everybody understands the strategy, understands what they're going to be looking for this week, understands what, how we're going to be approaching the markets this week. We're also going to talk about some different opportunities for us to be able to get involved in, etc., okay? So first and foremost, we are going to start, we can pick any pair. I want to start completely fresh. If you've been looking at a pair over the weekend, or you've been looking at something, or as a particular pair you like to trade, let me know, and we're going to break it down from top to bottom, and we're going to do it in this most simple, easy to swallow, understandable way, so that these concepts that underpin my trading, which is market structure and price action, the fundamentals of trading, all right? No indicators, no funny, strategy that we magicked up out in there. The pillars, the building blocks, the foundations of what happens in the market, okay? So is there a particular pair somebody wants to start with? Let me know. Gold. Yo. No, it's all good. Like I said to you, the whole reason why we put it out there to make sure, is any pair that you want to go and look at is understanding that this is the fundamentals, the basics, and therefore it underpins every market in every, asset class. Okay. So I'm going to delete everything off this gold chart. All right. And we're going to understand a few things. I'm going to pull it up. I'm going to make you guys sick of seeing it, all right? Oops. I'm going to make you guys sick of seeing it. And that is our Russian doll, all right? Because, you see, when I talk about this Russian doll, I've had a few people that spoke to me and they've been like, listen, bro, that Russian doll theory is just in my head whenever I look at the charts. Whenever I look at the charts, this is all I'm thinking. I'm thinking to myself, Jay spoke to us and told us that the market is like some Russian dolls, the market is like a bunch of Russian dolls, meaning that the higher time frame contains that time frame lower, and that lower time frame contains the time frame lower, and that lower time frame contains all the time frames lower than that, and it continues going forever and ever and ever. Amen. All right. And if you can understand that, that means that when you're in the markets, you're always thinking about the higher time frame analysis. You're always thinking to yourself, okay, this is what's happening on this time frame that I'm looking at, but do I know what's happening on the larger time frame? Do you understand? This guy over here is the 1 minute, and then we have the 3 and the 5 and the 15 and the hour and the 4 hour, and the 12 hour and the daily and the weekly and the monthly. This is how it works. They're all contained within each other. All right. So when we're looking at these pairs, let's move this over. When we're looking at our pair, for example, gold, we can't just open up gold and we're here on the 10-minute chart and just start analyzing, start going for it. It doesn't work like that. And it doesn't work like that in any other walk of life. This is what's so, how can I say? This is what's so simple and interesting about these markets. Because when people come and they look at these financial markets, they start to overcomplicate these things. But if I said to you, listen, I need you to invest in my company, you wouldn't just ask me, okay, so what has it been doing yesterday? You run me the numbers for yesterday. And then when I say, well, yesterday we did amazing. We did, over 200% return. I go, okay, at that point, you've got the money. Here's 100K. Here's 10K. We'd never do that. We'd say, what have you done over the last X amount of time? We'd zoom out. We'd say, okay, since you guys started, what year did you start? Okay, so what have you done since then? That's what we do. So when it comes to these charts, we must do the same thing. How do we do that? We do that by simply zooming out and understanding what these markets have been doing. Okay? The first thing we know about the markets is that we do not know what they're going to go and do. We do not know the future. Yeah? If you do know the future, please do call me on a personal and let's have a chat about what's happening in these markets tomorrow so that I can put everything on it. So the kids, yeah, everything, and put it on whatever's happening tomorrow. But most of us, if not all of us, do not know what is going to happen tomorrow. But what we can do in these markets is we can open up our charts and have a look and see what happened yesterday. You see, now what the difference is what happened yesterday is a fact. It's not an opinion. It's not my idea. It's a fact what happened yesterday. Because I'm looking back on historical data. Historical data. All right. So when I'm looking at this chart here and I've gone all the way, this is the monthly chart, meaning every single one of these candles that you can't see too well is a month in time. Going all the way back over here in gold, all the way back, that says 1970. Now, I'm a day trader. I'm trying to get in and out of the markets today. So, what happened all the way back, 40 years ago, 50 years ago, it's not that relevant. However, it helps me, start my journey and start to build up this Russian doll. Okay. So when I drop all the way down here and I go, look, and I have a look in my weekly, all right, going all the way back here to 2018, 2019, I can clearly see, or we could clearly see from our Russian doll, even when we was out on the monthly, that this market is a bullish market. This market over time has been making higher highs and higher lows and higher highs and higher lows and higher highs. Yeah, because gold is a safe haven asset. Everybody wants a little gold. Go and buy somebody a plastic chain for their Christmas present or for your anniversary. See if they enjoy it. See if they're going to be over the moon about the plastic chain you bought them. They want it in some sort of precious metal. Yeah, and one of the most precious metals that we consider in this planet is gold. For many reasons, all right? For many reasons, we value gold, okay? And gold is seen as an asset that, it's pretty liquid in regards to, I'll say it's pretty liquid, but I mean, in regards to its value, it's universally accepted and understood that, okay, look, I haven't got your 10 grand in cash, but I do have a 12 grand gold chain that's, in weight. And let me give you my gold chain, for the debt that I owe you. Now, you might be a bit annoyed because still got to go and process it, got to take it somewhere and turn it into something that you can actually is a little bit more liquid. But it's relatively like, you might be like, you know what? I want me 10 grand, they're going to give me 12 grand gold chain. You might take that gold chain. So, I'm going to keep it stepping. Yeah. Whereas, if it was wood, if I said I had 12 grand worth of wood or had 12 grand worth of, I don't know, plastic buttons, would you take 12 grand worth of plastic buttons over the debt that I owe? Probably not. So gold is a safe haven asset. When things are going tits up in the world, people go, you know what? I think I'll buy some gold. Relatively an asset that is quite safe. Okay. All right. So when you're looking at this chart here, we can see here that this market has been making some higher highs. This is going back to 2018. Higher highs, higher lows, higher highs, higher lows, higher highs. It went up in this level here. And then we saw something occur, which we was calling the three kings. Those three kings were three equal highs. 1, 2, 3. So ultimately the market came all the way up in here and couldn't break this level for some time. Sometime it was dancing around in here. Yeah. And then we saw the market do something here. Look, what does this look like for the people that understand what's going on in these markets? This little push down here. What does this little push down there look like? When it pushed down here first before making this pushing in this direction.
Liquidity grab.
Yeah, it was on a big scale. That's what it was. Because the market was trading within this little range here and it went nam, 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 nam. Ate some liquidity. Okay. of people thinking to themselves that this market's not going to break this level. Then it started to push in the opposite direction, breaking structure. Let's zoom down because we're still miles out, okay? But we're building up this picture. So on a daily time frame, we can see how the market came from. I'm just going to take in from this level here, what's on our screen, just so we can keep creating this picture. Because what we're doing here is we are learning a language, the language of price action, market structure. So when we see these candles are telling us something, and we must have a way that we start to create some sort of narrative, some sort of story. If not, what are we doing in the markets? We're just guessing. We're just gambling. I had a dream yesterday that, gold was going to go up. So I just decided to, put the mortgage on it. That isn't trading. That's fraff. You might as well go casino with your bird and have a whale of a time. We want to look back historically and see information and try and use probability and understanding previous price action and things that the market's done so that we can have an edge in this market. So I can see here, for example, from November 2022, after the market was falling within that range, within that much larger range, where that price couldn't break those three kings, we saw the market making lower lows and lower highs, and them deciding when it came down to that level and nam, had a little bit of liquidity, ate some of that liquidity, then it started to make higher highs breaking previous structure. Now, the easiest way for you to identify structure is to understand what structure is, to understand it like this. This market was falling down here. Every time it came up to this level, bang, something happened, forced it down. Came up here, bang, something happened, forced it down. Came up here, bang, forced it down. What forced it down was a huge amount of selling pressure. In the markets, we understand that in the markets only do one of three things. They either go bullish, making higher highs and higher lows. They either go bearish, making lower lows and lower highs, or they either go sideways, making equal highs and equal lows. These are the only three things the market does. But the market is doing those things for a reason. In this instance, there are more buyers, more buying pressure, more orders for unfilled orders in this market to buy than there are sellers. So therefore, this price goes up. Think about this. Don't think about this about gold, USD. Think about it as anything. If there is more people willing to buy that thing, this is economics 101. If there is more demand for something, the price goes up. That's the basics. When there is, more people willing to sell a thing, all of a sudden, every single body's selling this thing, the price will go down. And when people are not sure, the price will teeter around sideways. When there's an equal level of buyers wanting to buy and sellers wanting to sell, the price will go sideways. This is the basics. Don't need to get into, this is XAU, UST, and D and overcomplicate things. So we can see here that for whatever reason, after this market came down here, the market decided, and when I say whatever reason, because there is a huge number of reasons why the markets move. Fundamental reasons. Wars start happening. When the wars start happening, everyone's a bit concerned and thinks, oh my gosh, what's going on? They might turn to gold and say, no, I'm going to put my money in gold because I don't really want to leave my money in the Ukrainian currency or this currency, or the Caribbean dollar. I prefer to have it in gold. All right, so that could be a reason. There are other reasons also, fiscal policies and things that are happening on a political level that influence the value of the USD, for example. Because remember, this is the Forex market. And let me explain something to you about the Forex market. The Forex market is not a real tangible thing. Let me say that one more time. It's not a tangible thing. You cannot go and buy XAU USD. You cannot hold XAU USD because XAU USD is the comparison of XAU, which is gold, against the United States dollar. It's a derivative product. They're showing you what the difference between these two are. If we was trading in a futures market, this market over here, the futures market in here, futures, we could actually just trade gold. This is the physical asset, gold. And in the futures market, if you want to get down to it being old school, because they have contracts that roll on month by month, If you hold gold by the end of the contract and don't renew your contract, technically, you could receive a delivery of gold. Technically. Now, your broker doesn't allow that to happen when you're trading futures. It will give you warnings and it will try and roll you over to another contract. But this is the difference between a futures market and the Forex market. In the futures market, we can trade wheat. And again, technically, if you don't renew your contract at the end of the month, you could get a delivery of wheat to your home address. Now, why is that the case? Because this is a real market. And there's some sort of company out there, for example, cocoa. This is a cocoa bean. You can trade cocoa because Costa need cocoa bean. So they are actually buying cocoa bean. Just like if we was trading aluminium, you're just trading it to make some money. But let me say something to you. Boeing need aluminium to make planes. They actually need aluminium. They're buying aluminium. You're trying to trade it and make some money from this price movement, but they actually need aluminium. To say, for example, something happened in the world where all of the planes got destroyed. Fictional scenario, 2012 scenario, all of the planes got destroyed. All right. And, all of a sudden people wanted to travel again. And all of the plane companies, needed to build more planes. What do we think would happen to the price of aluminium? If all of a sudden there was no planes for some reason, all right, and then all of these companies needed to build new planes, what would happen to the price of aluminium? What would happen to the price of aluminium?
It would go up.
Of course it would. Because all of these companies actually need aluminium. They're like, listen, we need aluminium. We're willing to pay whatever. We need aluminium. And the price would go up and up and up and up and up. All right. So that's the difference I'm explaining to you between, which a lot of people don't know. A lot of people will pretend to know, but they don't understand the difference between futures, options, Forex, stocks, crypto. They are all built upon the fundamentals that we learn every single morning, but they have different nuances. Because let me explain to you something. Let's see if you could answer this question. Let me duplicate this out. If we was trading futures, for example, and we understand that there are actual people who require that asset, who actually want to purchase that asset. Let's imagine that we was in here in the futures market. Have a look. Have a look. If I hit this button, I go to futures. Then I go to trying to think of what I could go to. Look, there is, the point I made like this. Lean hog. For the man who want to eat lean hog, all right? But just understand that it's probably not the best example, but you could be in the market for things that are seasonal. Do you understand? Seasonal. So if you know when the season for a certain thing is, whether that be strawberry, whether that be something else, blah, 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 what do you think is going to happen in that season? When whatever it is that was growing is now come to fruition and can be harvested. So that gives you another added nuance of being able to trade those type of markets. I'm just showing you the differences. They're all the same. They're all built upon this market structure, price action, supply and demand. Okay. However, they have slightly different nuances. Let's look at gold. So as we was here and we was looking at this, we can see that this market is trading within this range. And we saw this huge impulse here. Look at this big wick here. Remember we had these three kings previously. And we saw this wick up here. Who could turn around and tell me what this wick was? What does this wick look like? What does this huge wick up here look like? Somebody knows.
Imbalance.
Nope.
No.
Remember, we had
news.
No, it's not news either. All right. You remember, I'm going to put a little line in.
Sorry. A liquidity grab.
Of course. Because above our three kings over here, okay, we had huge amount of liquidity building up above those highs. Now, for people that don't understand what that liquidity means, it just very simply means an area that a lot of people believe is very strong. We had the analogy previously about our lions and bears. and that blue little line being the river. Yeah, and over here, for whatever reason, people were scared to cross that river. They heard about lions, bears, and mythical creatures that lived over there. Yeah, so every time price came up here, it says, no, we're not going past that level. Came up here, said, no, we're not going. And people started thinking to themselves, listen, if nobody's going to go over here, maybe it's a great idea for us to hide our money over here. Because nobody's going to go over there. It's so strong. Nobody wants to cross the river. This is how I want you to remember this concept. All right? Nobody wants to cross the river, but understand this trading game is a game. It's a zero-sum game as well. It's, think about it, if I'm in a market and I buy something, I take from some, they have to give to me. There has to be this exchange that happens. And if everybody's in this market and we're all exchanging money, it means if you win, somebody's got to lose. Somebody's got to take the other side of your trade. So therefore, when the markets understand that all of these people have been putting their money across from the river over here, if it's a zero-sum game and this person wants to win, have a look. Nam, 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 nam. This wick pushing up here is about coming and lashing all of this monies. Nam, nam, nam. Eating the liquidity that was sitting above there. Oh, you man thought you were smart. I don't even want to fight the lions and bears. I'm going to quickly dash across the river, steal all of your money, nam, 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 that you thought was safe, that you placed your stop losses up here, yeah? And I'm going to completely smash your stop losses to pieces, and then I'm going to run in the opposite direction that we always see happening after liquidity has been taken. And we saw here exactly that. Watch, nam, 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 all the way up to this peak, and then the market dashed in the opposite direction. It dashed in the opposite direction for well over, like loads of pips. Yeah, for loads of pips in this opposite direction. And then once it got there now, you know what it does? It runs around the corner, okay? And then it goes through your wallet, takes out all the money out of the wallet, puts it in their wallet, then throws your wallet away. And then the cheek is it comes back and walks past you slowly after robbing your money, as in it continues going in the direction that it was going in. So it comes and steals your money, nam, 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 runs in the opposite direction, yeah, sorts itself out, and then you see the market calmly just come and just walk straight past you like, I don't know, even trying to help you look for it. Oh, you lost your money, bro. Where did you lose it? Starts trying to come and help you. I want you to understand liquidity grabs just like that. When you see a level building up, okay, whereby for whatever reason the market doesn't want to break it, then this is a psychological sign that this is some great area of resistance, where the market just can't break this strong area of resistance. But that then becomes a target. And when that market finally nam, 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 especially if it does it with speed and strength, and you see it's going to run in the opposite direction, yeah, and then very likely decide it wants to continue going in the same direction. All right, so have a look here. Now we're taking this further breakdown, and the lines that I'm drawing on the screen, guys, they do not mean that when the price gets to these lines, you hit the button. It's a guide for your eyes, for you to keep remembering and understanding that Russian doll. It is a guide. I don't see this thing get up to these orange line and just hit the button like I'm playing Snap. No. But on the grand scheme of things, when I'm starting all the way out on a daily and I'm going to get all the way down to my 5-minute charts, I want to have some sort of visible guide of what's been happening in the market, so I can understand this Russian doll, the shape of it. So I can go, oh, wait a minute, we're getting up to the ceiling of this doll here. Okay, when we get to the ceiling of this doll, we might bang our head and go back in the opposite direction. Or, oh no, this doll here is bearish. So even though this market here is coming up bullish, when it hits the ceiling of this, boom, I'm expecting to see a reaction. That's the reason why we speak about this Russian doll. So have a look right here, right now for gold. Gold was trading within this range and boom. One thing we also understand, and we make very, very basic, very, very simple for those of you who are trying to grasp these basic concepts, is in any range, in any range, we want to do what at the bottom of the range? Somebody tell me quickly. What do we want to do at the bottom of any range? Like as a knee-jerk reaction, we want to buy. And the reason we want to buy is because at the bottom of a range is identifying that market there is cheap. Think about it. Let's imagine that this little thing that I've drawn here is the market for, I don't know, anything for Jordans, for the new Jordans. Well, yes, it would be great if we bought them back in 2001 when there was this price, but unfortunately, we can't go back in time. So the next best time to buy these trainers would be here. That would be the next best time that I'd be, to be able to buy them. Oh, I missed this opportunity. The next best time to buy them would be here. The next best time to buy them is not going to be up here because that's going to be the most expensive that they've been. If I was waiting here and the price go all the way up here, I don't want to buy these trainers that are the most expensive that they've ever been. In fact, if I bought them down here on this little green line, I'd probably wanted to sell them at the most expensive that they've ever been. And then when I sell them, boom, 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 for whatever reason, the demand's still there for them, and boom, somebody buys here. But I don't want to buy again all the way up here at the most expensive that they've ever been. In what instance in your life are you trying to buy something at the most expensive it's ever been? Just tell me one time. Do you go Tesco's and you're like, I just can't wait till instead of milk being, $2, I can't wait till milk gets to $20 and then I'm going to start buying milk. When does this happen? Imagine you've been looking at a jacket. Oh yeah, I've been looking at Stone Island jacket. It's cold. You're trying to buy and you've seen the price fluctuate from, 500 quid. And then you go back to Choice or wherever it is and you see it and it's at 650. You go, 650? I remember when it's 500 quid, you don't want to buy at 650. I'm going to wait for the sale. And then when the sale comes, it doesn't get down to 500 quid, it gets down to 550. And if you're lucky, you buy here. If not, you stay, you don't buy it. And you go back there and you see it up time, it's 750. Like, whoa, I can remember the time when this jacket was 500. And if you was to plot it on a chart, it would look like this. And you'd be waiting for it to get back down to the cheapest possible price that you could buy at. Not at what once upon a time you could buy it, because you can't go back in time. If you could go back in time, go back and buy your mum's house 30 years ago or 40 years ago. See, well, how much was it then? How much did she buy it for? Maybe she bought it for 20K or 30K. Now her same house is worth 500, 600K. So yes, it'd be great if you could go back 20 years, 30 years and go and buy your mum's house. But in reality, you can't. You've got to buy it the next best possible time that you can buy it. So you're waiting for that price within this range that you can see I've drawn here to get to some of those green lines, get to some of those points where you're able to say, you know what? It's not what my mum bought it for, but it's the best that I could do right now based upon what the market has been doing. Based upon what the market has been doing, this is a good price for me to be able to buy it. This is the basic fundamentals of trading that when it comes to people start looking at XAU USD, it starts getting all cryptic. Wow, this is XAU USD, it's mad complicated. I need to, I don't know. All common sense is just gone completely out the window. So when I'm looking at this chart here, let's go back to the actual chart. I understand from a basic level that look, in this instance, I would have wanted to buy it on down here. I would have wanted to buy it down here. I didn't want to buy it up here. If I bought up here, I would have been a mug and I would have lost my money because up here the market started to fall to hell. But if I bought down here, boom, I'm in the money. I'm in Bond Street. I'm buying a big chain based upon this energy. Now look, what does that mean now? That means that if these trend lines mean anything, and the only reason why I placed this one like this and not at the top of this wick is because I believe this liquidity grab is not the norm. This was manipulation to grab that liquid, but I don't know. So if I wanted to, I could put them both in as a guide, like this. But what I am saying right now is based upon, especially this, let me fade out this second line that I drew. Fade out a little piece, so I don't want it to take up too much eye space. But based upon this, I don't know if I'm going to be in a hurry right now to just buy gold. Now, can gold continue and start pushing up here into space? Of course it can, because I don't have a crystal ball. It can do. But based upon the basic understanding that this market looks very overbought, this is getting into language. Language is what separates us from animals. The market looks very overbought. You might hear people say, it's very hyper-extended in a certain way, meaning there's been lots and lots and lots of buying. And when lots and lots and lots of people are buying, let's get back to our basic understanding, our common sense. When lots and lots of people are buying and prices are going up and up and up and up and up, what do we think that the guy who bought all the way down here for cheap, what do you think his hand's itching him to do? When he's bought his Jordans for 20 quid, and all of a sudden, for whatever reason, he goes on what's that website called? That is it X-Scanner? What's that thing called? What's the trainer thing called? Where you can see the price of trainers. I can't even remember. Someone knows. All right. And he looks at it and he goes, whoa, these are 300 quid. I paid 30 quid for them and now they're 300 quid. What is his hand going to be burning? Furthermore, he didn't buy one. He bought a box of 10. What is his hand going to be doing? Itching. What's he going to be burning for him to do?
Ready to sell, make his money.
Make his monies. Oh yeah, sorry, I'm looking in the group. There's been messages in the group. Okay, yes, Dane. Yeah, okay. I just see the name. Yes, that's what he's going to be looking to do. He's going to be itching. It's going to be burning him. His hand's going to be like, raw. I've got over. Let's do the math on it. What's that? What did I say? 30 quid, 300. What's that? 270. He's got that 2,000, nearly 3 grand worth of profit sitting in that box. He's going to be burning him to take his money. Absolutely burning him. And when he starts to sell, when all of these people start to sell, and we see this herd mentality of sellers entering the market, sellers, what do we expect this market to do? Continue going up? Or do we expect it to have some sort of reaction and see this market start to get bearish? Even if that it overall wants to go up, we're going to see a percentage of sellers that are going to be like, yo, I'm taking my money right now. I need to go and pay some bills. So therefore, I'm anticipating that after we see this push up, this hyper extension of a market, that we're going to see some sort of reaction that may be bearish. Now, listen, in an ideal world, I want all of the stars to align. Now, what do I mean by all of the stars align? Let's go to my little diagram, if it's still there. Let's have a look where my little diagram is. Yep. I want all the stars to align, meaning that the market is fractal. That is what our Russian doll theory shows us. It shows us that this shape fits in this shape, and these 2 shapes fits in this shape, and these 3 fit in this, and so on and so forth, until all of these sitting in this bigger structure. Now, I ideally understand that the markets, so I understand the market's moving waves. So even within this leg up, this market's doing this. Have a look. It's moving like this. I'm going to make it a better color so we can actually see it. But the market is moving within waves till it comes up here and it starts moving in a wave down here. Okay? This is what I understand from the markets. Let's make that a better color. Let's make that. There you go. And I understand that if I was to zoom in some more into that little bit of this blue leg here, I would see again the market moving in waves up and down here. Look, I'm trying to do it because my artwork is fantastic. Have a look. Like so. Can you see a little red little zigzag? And it moves in waves over and over and over and again. Now, in an ideal scenario, I would like to understand that my bigger Russian doll is bullish, going up. And the smaller Russian, so let's imagine that bigger Russian doll was the daily time frame for argument's sake. These orange lines here was the daily, saying it's overall bullish in my daily structure. And then ideally, when I'm looking at it, that yellow structure is the 4-hour. So ideally, I'd like to be in a situation where I'm buying. So let's imagine, let's go back in time. And let's imagine I'm here in time. All right, this is this yellow line. I'd like to get involved when that yellow line is also bullish. So now I've got the bigger structure daily, bullish. Then I've got this smaller structure on the 4-hour, bullish. And then ultimately, if I was getting down smaller, I'd like to be able to see some breaking structure on the 1-hour, bullish. And I'm trying to get in over here on the 15-minute or the 5-minute when I can also see some bullish breaks of structure. So although everything's aligned, I'm taking a buy in a overall bullish structure, which is bullish on the daily, bullish on the 4-hour, bullish on the 1-hour, bullish on the 15 minutes, and breaking, giving me my indications, my corrections, my continuations, bullish on the 5-minute time frame. Because then I'm able to get into this trade and I'm able to ride the wave. Now, what I explain and let you understand by what this trend means, it's like you trying to swim with the current. If you're trying to swim in a river downstream, you're gonna go like lightning, like Aquaman, zatting through the water, because the tide is taking you, the current is taking you in that direction. Now, if we just flip that on his head and say, listen, oh sorry, my bad, Dane, I'd like you to swim the opposite direction. I need you to get up the mountain. You're going to be fighting against the tide. And if you ever try and take a break, the tide is going to push you back. If you stop kicking, you're going to go backwards. So therefore, when you trade against the trend, it's not something you can fall asleep on. If I hit a buy here by accident, I just hit a buy down here by accident, I could fall asleep on this trade and wake up a week later, I'm going to be up here. Like, whoa, that trade did really well. Oh, I forgot about that trade. But because I was trading in line with the trend, I was able to get in, like, I was able to take advantage of where the tide was taking me. But let's flip it on his head. What's going on over there? One of my screens are just flashing, which is interesting. Sorry, bear with me. Got one of my screens is flashing. There you go. All right, so, but if I was to take a sell, screens is flashing. Why is it flashing? Why did you just start flashing? Let's see if I can work that out. All right, so, oh guys, I don't know. My screens are flashing. I have to turn it on. So, in regards to, if I was to take a sell in this market when everything's pushing up, well, I can't fall asleep on that trade if I sell the market from up here. Even if on a smaller time frame, I do sell from an area which I believe that they're going to be, that's fine. And look, I'm profitable selling, I'm profitable selling, I'm profitable selling. But because the overall market is going bullish, I can't fall asleep on this, because when I wake up over here at this time in July, this trade is going to be up here and I would have lost this trade and taken an L. So this is why we ideally want the stars to align. Or at least if we're taking a sell in an overall bullish market, we want to understand where we're going to need to get out before that market gets back with the program and starts pushing up. Okay, so let's get to this trade. This is a representation of our current gold scenario. Our current gold scenario is that we can see that this market is making higher highs and higher lows. Higher highs. You want to see it? You want to draw it on? This is the, look, it's making higher highs and higher lows and higher highs. And if I was to go back in time some more, we could see that the market was making some, was making, I'm going the wrong direction, was making higher highs and higher lows. But right now, within this range that I've kind of drawn here, and how have I drawn this range? I'll tell you how. I've taken these two data points. Data, let me make a different color, everything's red. This data point and this data point. And then I've pulled out a parallel line to try and touch where all the other data points were, in general, were sitting. I have ignored this anomaly of this wick, all right? Which I haven't completely ignored it because I've given a little shadow line all the way up here, taking it into consideration. But I kind of think that was a bit of manipulation, this wick. So I'm not letting, it's like, imagine you had data, guys. Think about it again, once again, in common sense way, yeah? If you was doing a study and you was trying to see how many people are a certain height, and you was out in Stratford collecting information, asking 100 people how tall they are, and everybody on average was 5'11", 5'10", or 5'9", or whatever it may be, and then there was just this, there was the South African basketball team that were in town just for that weekend, and they were all 9-footers, 10-footers, 12-foot giants. Now, out of 100 people, you only saw 3 of the, or 4 or 5 of this basketball team, but their results are going to completely do what to your information, to your analysis, to your study? What are they going to do? What are they going to do to your data set that you're trying to have a nice cross section of the community? but they're going to skew your data set. They're going to make your data set be a little bit inaccurate because they are an anomaly. They just happen to be in town and they are freaks of nature. That's why they're in the basketball team, because they're all 8 foot, 7 foot, 9 foot, 25 foot tall. That's not a true representation of what's actually happening in regards to height within your community. So this is the reason why I'm saying to you that I'm kind of, at liberty to ignore this spike. Okay. So when I'm looking at this market here, I'm expecting at some point that we may see a bearish reaction to, where we currently are. Now, what does that mean? Does that mean I can just hit the button and get in for a sell right now? Of course I can't. I'm on the 4-hour time frame. Every single one of these candles is 4 hours in time. And I need more information, more detail. And in these markets, how I get more information, see, a photographer, when a photographer wants to get more information, when he's trying to take a picture and he wants to zoom in, he changes the zoom and he gets closer to what's going on. For us to be able to do that, we have to drop our time frame to get more information. So right here, I can see this 4-hour push, this structure. I can see higher highs and higher lows and higher highs and higher lows and higher lows. This is 4-hour structure, very strong. Here is a swing low. Let me make that white. On this 4-hour impulse, these are major structures in here. Yeah, these levels are structures I can't deny. You can see the step. You can see the step. You can see the step. If you can't see it, then wipe the biscuit out of your eye. Yeah, because you can see it. This is the peak. And if you can't see it, turn to your line chart. Have a look at the line chart. You can see every time this comes down, every time this comes down, every time this makes that little valley, that structure. That means that there was some demand coming in here that kept pushing this price. The price came back down here and said, nope. The price came back down and said, nope. And they kept heaving. They kept pushing. So therefore, that becomes structure. That becomes a point whereby the battle was won for the buyers. This white line was a point where the battle was won. This white line was a point where the battle was won. Because the sellers tried to say, no, we want to go back down. And the buyer said, no. So that becomes structure. So when I'm looking at this chart right now, I'm understanding that right now, this market is trading within this low on a 4-hour time frame and this high on a 4-hour time frame. That's where the market is currently trading within. If I wanted to, I could put a little box in here. If I wanted to. Because that's the last high. This is the last low. This is why my trend line is like this. It's touching the last low before the highest point at the moment. Now, if I zoom in, go to my 1 hour, I get more information. Look at the information. Because previously it was just looking like it was a bullish action making higher highs and higher lows, which it is. Within that range, the market has started to go. Somebody tell me what the market looks like it started to do. Just in here.
Sideways.
It started to go sideways on a smaller time frame. Maybe not on a 4-hour time frame, but now drop to my 1 hour time frame. These candles in here are doing a little bit of a hokey cokey in here. All right, they're doing a little bit of a hokey cokey in here. Now they might decide they want to come and push up in here, but now I've dropped my 1 hour time frame. I can look for some more little bit of structure. Now I've zoomed in. Now I've got a little bit of a clearer, like I can see more. I can put in some more little lines in here. Watch this when I drop to my 15-minute time frame. That consolidation is going to looks a bit clearer now. Just a minute ago on a 4 hour, we couldn't see it. Just a minute on a 4 hour, it was just pushing up within that range. But now when I zoom down a little piece, have a look. This market has been kind of fraffing around in this level here. If you had bought this market, you would have seen your profit going forwards, backwards, doing the candy dance. All right. So this is now, at least now I've zoomed in, I'm able to turn and go, if I understand a few things, that in a range, I want to buy from the bottom of any range, and I want to sell from the top of any range. That at least gives me some sort of, okay, I'm not necessarily going to be selling right now unless this market does something else. Because let me tell you something about the markets that I know. The markets will continue to do what it has always done until it does something else. All right? Until it that's right, produce a false positive. That's right, what Dane, I see you just say about the data. Correct. The market will continue to do what it has always done until it does something else. So right now, my opinion of this market is that this market is going to consolidate in this range forever until kingdom comes, until it decides to do something else or do something else. So now I have an option to say, I don't really want to get involved in this hokey cokey. Because to get involved in this hokey cokey, I have to buy at the absolute extremes. Plus, is it a big enough range? Plus, it's coming off the weekend. It's a Monday. I don't want to get involved in this little hokey cokey. So I can quite easily now say, I'm interested in what this market does when it breaks outside of that hokey cokey. When the market breaks outside of that hokey cokey, either crossing down outside this box or pushing up and crossing up above this level, I want to see what's going on. Is it going to be another liquidity grab, or is it actually going to give us our structure and our strategy, what we look for, of showing us an indication, then giving us a correction, and then continuing on its journey? Is it going to give us that indication, correction, continuation? So I've done it. I've placed my alerts. These are going to be my AI. These are going to be my little soldiers that stand guard and watch to see what's going on. I'm not going to sit here with my mouth open for the whole day like I got nothing better to do on a Monday. But my alerts that I'm able to put up here on this area, and I can decide how I want it to, notify me in the app, show me a pop-up, play a sound, even send me an SMS text message. Let me know when something's going on. And when that market breaks outside of there, ultimately, I have the higher picture. Remember, the higher Russian doll narrative or concept or idea that I've been reading into, that ultimately what I'd like to see is this market making some sort of retracement, because it's been, have a look, going nuts. Now, this is the difficulty. Has this market finished going nuts? Has it finished coming up here? Because look where that orange line is. Is it finished coming up here? Does it want to push past that orange line? Then decide it wants to start coming down here? Because if it does that, on the bigger picture, my orange line here, this one here, would still be valid. I'd still be going, look how it came and tapped right at the top of that range. You know why? Because this is the orange line I draw on my screen. It's not to the millimeter. It isn't sending a signal to the market saying, yeah, Jay's drawn an orange line. As soon as we get to the orange line, we're going to turn around. Maybe I've drawn this orange line wrong. Maybe the angle's slightly off. Maybe it should be here. Maybe we are taking into consideration that massive wick that came up here, and this little orange line here that I said I faded out, maybe it wants to push all the way up to here. I don't know. But what I do know is I can read and react to what the market does. I don't need to predict the future because my crystal ball has run out of batteries a long time ago. I can read and react to what the market does. So right now the market is trading within this 4 hours low and this 4 hour high. Even if it starts to break out here and on a smaller time frame, on a 15-minute time frame or on a 5-minute time frame, for argument's sake, I get a fantastic entry of this market breaking outside of that little range that we can see. As I've dropped my time frame, we can see it's fighting within. Yeah. Even if it does this now, does a lovely little indication in here. Does a lovely little correction. There's a lovely little continuation, and I decide to take this sell because I believe that the market may be turning around. Well, on the 5-minute time frame, it's breaking this structure, but I've got to remember my Russian doll. Where is my 15-minute structure? So when this market starts coming to here, for example, do I know that that 5-minute entry is going to break past this little low? Do I know that that 5-minute entry is going to continue to break past this little level in here? I don't know. Because that is that bigger 4 hour range. Do I know that this market is going to break outside of this 4 hour low in here? Look on the 4 hour time frame, have a look. I don't know. So that's how you either take your profits or you protect your position so that you're not going to end up losing money in the markets. All right? That's how you do it. Because you've only taken an entry based upon this little Russian doll here, look. How can this little Russian doll here think he's going to come and bully and break through this structure of this guy here? It's unlikely. It's possible, but we have to respect the bigger boy. We know that the markets break structure and change direction, but we cannot assume that this little guy over here we've got this lovely 1 minute entry, and that 1 minute entry is going to bust through everything. It's very likely this 1 minute entry is going to come up to this structure here and get a big slap and have to be pushed all the way back down where it came from. And that push all the way back down is what could stop you out. Unless your stop is in a great distance, that it's not going to be affected. And that's what traders don't understand. They say, oh, I got this great entry on a 5 minute time frame. And all of a sudden the market starts kicking back on them and stops them. And oh, what happened? Well, what happened is you hit a 1 hour level of structure that slapped the market back down to close to the previous 1 hour low, which might be far from where you made your entry. All right. So I want you to really, truly grasp this concept. So what would I be doing right now with the gold? This is what I'd be doing. I'd be popping my alerts in, which I've done. And I'd be waiting to see, I'm gonna drop my time frame all the way down to a 5 minute time frame, especially it being Monday. And why do traders talk about Monday in this way? Does anybody know why Monday sometimes holds a little bit of fear? And some people tell me, and they say they don't trade on Mondays. Does anybody know a very simple explanation of possibly why? In the Forex market.
The market's catching up to what's happened over the weekend.
There you go. Because though the Forex market stops on a Friday and then opens back up on a Monday, the world is still spinning over the weekend. And what happened if on a Saturday midday that somebody blew up the gold mines, some of the biggest gold mines in, I don't know, wherever they are, DRC or Ghana or wherever they are. Someone blew up those gold mines, destroyed, obliterated all the gold over the weekend. Well, then that's going to have an effect when on Monday the market's open and all the traders walking and go, rah, bro, you hear about what happened to the gold mines? Ain't going to be no gold. There ain't going to be no gold around. So let me tell you something. All of a sudden, it's become very, very valuable, even more valuable than what it is. And all of a sudden, you see on Monday morning, even though you've got this technical analysis and you've been analyzing and drawing your little lines and whatever it may be, the world needs to catch up to what happened over the weekend on a Saturday. And you can see a level of not even volatility, but price action that doesn't stay in line with what you thought the market should have done. This is why you hear people saying, yeah, Mondays are a bit mad. For some people, they love Mondays. I mean, historically, I've had great Mondays. Yeah, but I'm just explaining to you this basic way of looking at the markets and understanding Wagwan. Don't make this into the dark arts. Yeah, just keep it simple. Keep it simple, stupid. Other people want to overcomplicate this thing so that you don't know how to do it. But I'm giving it to you in a way where you can understand it. And more importantly, you can explain it to somebody else. Because I could convert everything I'm saying into saying, well, this is the SR 330. And when it comes down to the exclamation mark square root 9 of this, and you're just gonna be like, right, what's going on here? What was this guy talking about? What's all these abbreviations and this mad stuff that he's saying? How am I going to understand this when I've got to get over this language barrier and these 50 million different abbreviations that he's given to me for simply explaining to me that here at this point, there is substantial more buyers that want to come into this market for X reason. We must keep it simple. Yeah? So have a look. We're looking at this gold market. We've seen a little push here. Now, first and foremost, what do we wait for when we're looking at candles? What is it that we always want to wait for? Somebody knows.
A close.
Indication.
Somebody said it was the close. We're waiting for candles to close. You see, we don't know it's an indication until these candles close. How can I explain this? You're in a club. You're looking for confirmation that that girl is feeling you. I'm going to use it's for the women that's on the call. Apologies, but I'm a man, so I'm going to use that analogy, right? I'm waiting for the confirmation that this girl is feeling me. You see me? Look, I'd always say that, when I was younger, yeah, I got 100% success rate. 100%. You know why? Because when I walk into the club, I'm not just that guy that, you know those ones, or just that one, just grabbing a girl's arm. He don't get no play. He's a waste man. He's bordering sexual harassment. Yeah? I'm going to stand across the bar and I'm going to get eye contact And I'm gonna understand that this girl's already feeling me. I know her body language, everything, she keeps looking over here. Furthermore, when she starts walking towards me, at that point in time, I can't just show my hand and play my cards. Let me wait for that candle to close. She comes and stands right beside me by the bar. Says, "Hi, can I get a drink?" But she could have stood at the whole bar. The bar's massive. But she came and stood right beside me in the bar. All right, that's my candle closing now. Now it's game time. Somebody else, have a look. Somebody, that other guy, she started walking in that direction. She wasn't even coming to the bar. She's going to the toilet. He saw her coming in that direction straight away. He's like, yo, that candle did not close. You're getting in there all early trying to play your best line. She wants to go to the loo. Furthermore, she's walking straight past you to her man who just walked into the rave. Let's wait till that candle closes, till you get that confirmation like, okay. Because you see this wick here, just a minute ago, this wick was a big red candle that just set off my alert. And there's somebody here that they had no composure, yeah? That they hit the button. They hit the button for a saw. Oh, she's coming my way. Hit the button. And right now, look, the candle came down here, big red candle, and then boom, closed back up here. She wasn't coming to the bar, bro. She saw one of her mates from school. That's where she was going to, who she was chatting to. Maybe she's not feeling you. Maybe you was picking up those signals incorrectly. Maybe your radar was off. So I'm waiting for a closure outside of this range to give me an indication to say, okay, now right now, if I see a big red candle start coming all the way down here and closing over there, now that can't deny that is broken outside of this range. And then I'm going to be waiting for a correction, because she's got to go back and check on her brethren. She can't just leave her brethren for the whole night. She came with her brethren. She's got to go and check on them. She got to say, how you doing? Yeah, I'm just over there chatting to my guy. Yeah, he's a really nice guy still. Yeah, he bought me a drink. Yeah, and he does this and he does that. Yeah, I'm just over there. I'm chatting. And then later on, I'm waiting for the confirmation. I'm waiting for the continuation, I'm waiting for the continuation. So this is the indication, this is the correction for going back and checking and letting everybody know that she's cool. She's having a chat with Jay. And then I'm waiting for the continuation. This is her basically saying, listen, I'm going to stay here. Furthermore, yeah? You get me, G-Van? Furthermore, you see it there? Yeah? We continued in that direction. Yeah? That's what I'm waiting for. Because if I don't wait for those things, I'm going to get faked out. I'm going to take entries to trades quicker, because right now, at this present time, I do not know. Let me get rid of this. Get rid of this. I do not know if this market wants to stay doing the hokey cokey in here for the whole day. I don't know. I mean, why couldn't it? It's been doing that. Why couldn't it keep doing it? I don't know. So like I said to you, I cannot predict the future, but I can read and react to what the market does. All right, I hope I've drilled that down really solidly and you guys can understand what I just said. And you guys are going to be looking at charts, and whenever you're taking a trade, you're going to be thinking to yourself, has this candle confirmed? Now, let me tell you something about this confirmation, about waiting for candles to close. The issue that you're going to have and that you have to get comfortable with is that the smaller the time frame, the more unreliable. Yeah. So over here you got wifey material, really solid. Yeah, really solid. If she's gonna come over and stand by you by the bar, she means it. She's looking for a life partner. She's seen you and she wants to play her cards, and she's coming over and she's a good sister. As you start getting down in these smaller time frames, they get a little bit I don't know, can we have a word? They get a little bit like, any man turns their head.
Feisty.
I wouldn't even say feisty. Promiscuous, there you go. A little bit more loose. A little bit more easy. So no, all of these guys here, they don't really know if this person really likes them or not, because in the smaller time frames, there's so much noise. There's so much backwards and forwards from the bar I'm on the dance floor doing the dirty wine, and then I'm back at the bar, and then I'm whining some next guy, and then one. Have you ever seen that? Have you ever been out and there's this one gal and she's just whining every man in the club? And yeah, she's having a good time. I understand there's nothing wrong with just, you know, having a good time and dancing. It is only dancing. But I'm just saying, it's a bit hard for you to know whether or not she's feeling you when she's just whined half of the club on some on a madness, like on a handstand. She's just doing a handstand with random guys. I hope you guys can get my analogy. Yeah? I hope I'm giving you some sort of energy, some sort of joke. You get my point.
I'm with you.
You get my point, because look, when I go out here on a larger time frame, it's less noisy. I've only got a couple candles to deal with. So if this candle closes here, it took a whole 60 minutes to make that decision up. So I can look at that and be like, Rob, bro, this person made this decision after a whole hour. But on a 1 minute time frame, which a lot of day traders want to be at the 1 minute time frame. Why? Because it's quick. Because they don't have patience. It's quick. Everything's happening. Every 1 minute there's something happening. Yeah. I just want to get involved. I want to take trades. This is where all the dead bodies reside. Because here you can get faked out. You can think that she's feeling you when she's not really feeling you. She was just dancing with you. You can think that something's like, it's too noisy. So I would always urge you guys to stay away from this 1 minute, 2 minute, 3 minute time. Not until you get more advanced. And not until you have a real deep understanding of where you are market structure. And you can use some of these smaller time frames just for some early information. I'd say 5 minutes, stay here. As your lower, stay here. Get an indication, a close on the 5 minute. Now, what do I mean by that? I mean, when this candle starts coming down here, I'm looking at the time and I understand, look, here from the time, also here from the time, there's 3 minutes and 46 seconds left for this candle to close. Look at the time there. There's about 3 minutes and 46 seconds for us to get to 9:25. That's going to be a 5 minute close, but let me give you some power. Let me give you a little bit of source. The 9:30 close is going to be even stronger confirmation. 9:30 price, and why is that? Because the 9:30 price section has two 15-minute candles in there from 9 o'clock. And if we're thinking about supply and demand, there's millions of people that are sitting around waiting for the 15-minute candle to close before they do something, before they get in and sell. So when that 9:30 candle closes, we see all of these rush of sell orders coming into the market, pushing that market down. So I'm just giving you a bit of source there. Even though we're waiting for 5 minute close, at 9:25, that 9:30 close is going to be slightly more powerful than a 9:25 close. Understand what I just did. Somebody not understand what I just said? I want me to explain that one more time. Does somebody not understand what I just said? I want me to explain what I just said one more time.
So basically you're saying, yeah, like, if there's a 5 minute close, obviously that happens every 5 minutes. It's represented on the market, but at the same time, the 1 hour close is that will be represented on the market as well. But the 1 hour close obviously will have more like structure, like whether it's gone up or down.
Perfect, my bro.
All right.
Because at the end of the day, right now at 9 o'clock, when it was 9 o'clock, we could have been here going, there's a 5 minute close coming. Oh, yeah, and the 5 minute close is perfect. But it's not only going to be a 5 minute close, is it? It's going to be a 5 minute close. It's going to be a 1 minute close. It's going to be a 3 minute close. It's going to be a 5 minute close. It's going to be a 10 minute close. It's going to be a 15 minute close. It's going to be all of the time frames that divides into an hour. Okay, close. Whereas if it was the time was 9:23. When 9:23's only got a 1 minute close, the only thing that can divide into 23 is 1 minute candles. Do you understand what I'm saying? At 25, the only thing that can divide into 25 is going to be 1 minute and 5 minute candles. Yeah? So do you understand my point of aligning time with closures? This helps you to be even a more patient and more profitable, successful trader, because you're going to look at the market and go, I can get in now. There is a 1 minute close right now. I'll tell you what, I'm going to wait and see what happens in 2 minutes. 2 minutes. It's not like wait and see what happens in 2 days. Wait an extra 2 minutes and see. Now you might get a slightly worse entry, but who cares? 50% of nothing is absolutely nothing. Yeah, and even worse still, if you take that entry too early and you get stopped out, but then you're losing money on the basis you could have waited for 2 minutes and gone, okay, raw. On the 5 minute, I did not get a 5 minute close. Have a look at this. See these wicks here? Watch this. If I go to my 1 minute, I might be turning around and going, oh yeah, well, I can't see here. But I might be like, look, this is a 1 minute close down here. Well, I wouldn't be because there's wicks here, but you get my point. This is just all noise on the 1 minute time frame. I want to at least clear up that I don't want to deal with this promiscuousness down here. At least let me get the girl or talk to the person who's a little bit more balanced. Is not going to be doing a handstand in the middle of the dance floor. Yeah, because they just been thinking to themselves, it's unnecessary. Yeah, we're all having a good time, but the handstand is unnecessary. You're an adult. Fix up. Yeah, at least let me deal with that person. And furthermore, if you wanted to be even more patient, you don't necessarily have to be out on the 15-minute time frame, but based upon what I just said to you, at least be looking at those 15-minute closes. 9 o'clock, 9:15, 9:30, 9:45, 10 o'clock. Yeah? Or have a look at what it looks like on a 5 minute time frame. Now, we also take into consideration all the other things that we've learned and we understand with this strategy, which is about understanding where price wants to trade to. Price always wants to trade towards liquidity. Understanding that price doesn't like imbalances, inefficiencies in the market, etc., etc. We're going to go over that more tomorrow, okay? But in regards to this gold trade, I'm done. I've done my due diligence. I've marked it. I understand what it is I'm waiting for. And more importantly, I understand my Russian dog, or what my larger opinions are of this market. Even if I see this market pushing up here and doing something, I'm still going to be quite dubious. So look, let's say for this, let me put in some more lines also in here for you guys. I'm going to take this same angle, which is pretty bad at the moment, and I'm going to slap it here. Now, why has Jay got all of these trend lines like this? Because the markets change. The markets can get a little bit tighter. The markets can get a little bit more loose. I just want to have these guides in place to identify where and what might be happening. Now, look, this market could decide after all of this talk that I've been doing all morning that it wants to break up here and it wants to trade back up to the top of that smaller blue range and touch my actual orange line over here. It might do. And then here could be Wednesday, could be Thursday, decides, you know what, yeah, ready now. Maybe some news comes out and we see this, boom. Yeah, and then we see this happening. Very, very possible. I don't know. But what I can do, like I said to you, on a smaller time frame is I can trade what I see, and when my alerts go off, telling me if that market is broken above this level or below this level, and even if I take a lower, a trade and I say I'm going to buy into these levels, I know that when I get up into this area, I want to be taking my profits. Prior to getting up into this area, I would definitely be protecting my position, meaning moving my stop loss to entry so I can't take a loss. The reason why I'm doing that, because I know that ultimately there's a high probability I might have a reaction here to this bigger Russian doll ceiling. I don't want to lose any money if I happen to get into this trade like this, or vice versa. And this is ideally what I'd like the narrative to do, is it starts breaking down in this direction. But I'm going to be waiting for my indication. I'm going to be waiting for my correction and my continuation, and then we're rolling. But even when we're rolling here, I have to think to myself that this market could decide on a bigger time frame that it wants to come and have a little pushback up in here before coming down. It's just understanding this larger narrative. Nobody knows what the market's going to go and do. You just have these ideas based upon your own skill set analysis and the previous data. So for me, even though this is gold, extremely volatile. Also, I haven't even touched on, and we haven't got Brother Alan on the call yet, our fundamental specialist. You have to take into consideration what?
The fundamentals.
Fundamentals, yo. Because remember, we're looking at XAU USD. If something crazy happens in the USD, for example, interest rates goes up a little bit, yeah, or some other type of monetary policy that's going to make USD get substantially stronger. And I refer to strength as weight. If that USD gets very, very heavy in compared to XAU USD, we may see that market fall into hell. Or vice versa, if for whatever reason it loses strength and gets lighter, we might start seeing this gold continue pushing up. Look at all of this red folder news happening tomorrow. CPI, core inflation, All of these things happening that are going to have an effect on the US dollar. That's why they're USD news. That's why they're red folder. This can affect our short-term analysis of what may happen here. Because if USD gets extremely weak, we may see this gold to continue to rally. Because remember what I said to you about safe haven asset. Listen to how things align now. So I'm going to finish this session. How the stars align. If US dollar starts getting really weak, and you had your money or assets in US dollar, what might you want to do for the short term with your money that you've got tied up in US dollar? What might you want to do in reference to gold? I'm giving you all the hints.
What is it? Invest in gold, move into.
You might say, I want to put it in a safe place. I'm taking it out of US dollar. It's mad. They might say, my man said that he's going to drop the interest rate, so therefore US dollar is not gaining that type of strength, that interest. It's not that attractive. Let me, for the short term at least, move my money from US dollar and go and swap it for some gold. Because it's a safe haven asset.
Can you move that from my ear?
Do you understand what I'm saying? So these are the things that could happen, guys. All right. This is how the stars align in regards to just understanding the basics of how the world works and how one thing affects another thing. And more importantly, how you are going to look at that thing. Let me get into one thing before we finish up. We're like 10 minutes over. Is right now, guys, we're potentially going back into crypto season. All right. Altcoins, meme coins, they call them, or shit coins. And this presents a lot of volatility. However, even in these spaces, you have to use the same understanding of the markets to make sure you are not buying at the top, okay? And you know that you are making sure that you're investing in these things at the bottom. And I'm going to have a session that I've already scheduled in. I'm just trying to requested with the guru. All right, he is a crypto guru, and he's going to turn around. And the session is going to be about how he turned £300 into £200,000. And he is young and he understands these basics, and he's going to tell you about the things that he looks for in these altcoins and meme coins, so you can maybe take advantage of crypto season. All right. But guys, and he's a villager. Yeah, he's a villager. So he can communicate and let you know exactly what it is in a way that you can understand it, and maybe use these same principles to be able to take advantage of, because remember what I said to you, all of these things here are exactly the same. Stocks, funds, futures, forex, crypto, indices, bonds, they are all analyzed in the same way. They just have slight different nuances. Cryptos have slight different ways you have to get into certain crypto coins. Futures have certain different nuances to the charts. Stocks are slightly different because they're companies you're not trading without any leverage. Okay? But anyway, good morning. Amazing morning. It's not even a good morning no more. Man, I want to hear good morning. Amazing morning. All right. I'm going to play some stuff in our trading floor so that we can continue to learn something new, start our day. If you're able to watch, then fantastic. If you're not, I want to wish you guys have an absolutely fantastic and productive Monday. Go and fulfill your potential. Yeah. All things are possible. You got air in your lungs and the sun is shining ish. Okay. So go and fulfill your potential. So I'm going to put something on in our trading room that's going to maybe make us learn something, maybe something we've never heard before. I don't know what it is at the moment. I'm just looking. So see something that's going to be, I'll tell you what we're going to do. We're going to watch a trading podcast, and it's very poignant. Look at that. The universe aligned. All right. Some crypto coins are going to explode over 10,000% soon. All right, we're going to watch that podcast, which is directly in line with what we was just discussing, and I believe that there's money to be made.
Perfect.
There's a lot of money to be made in this crypto season. All right. So yeah, it might be very, very poignant. But guys, good morning. God bless. I'm very, very grateful. Even though we had low numbers and there's still a lot of people that are not on the sessions, I understand that I'm still grateful, still happy that everybody is here and with me on this journey, right? So for the people that are at home, come on, like and subscribe and all them things there. If you're watching it on YouTube, if you're rewatching it, guys, share the session. That information is not the source that I'm giving out is not going to be on YouTube forever. Yeah, I'm going to take it down at some point, all right? So if you do want to watch things back, if you do want to understand what some of the way I explain things, I know you've never heard. the markets broken down the way I break down these markets. And hopefully they do resonate with you and help you simplify and be able to take advantage of what's happening in the markets. But guys, good morning. God bless.